Hi all, how you doing? Hope you're doing great wherever you are in the world. So if you didn't know, BlackRock has come out with a little PowerPoint white paper. It's on their website, so it's blackrock.com. I'll leave you the full URL so you can have a look at it in detail if you want. But what this is just a white paper about about BlackRock, about Bitcoin. Okay, so their clients have basically been harassing them, tell us about BlackRock and all of that, that kind of thing. We're interested in investing in it. Tell us more. Is it safe to invest in that kind of thing? So they've basically put together this little report for their clients to have a peruse over and see if they like it or not. And what they're saying, okay, so what they're saying overall is they're saying Bitcoin is a unique diversifier. Okay. So what they mean by that is it's unique from anything else that anyone has ever seen before. So ultimately, well, we'll come to the conclusion that they could get to later on, okay? So they start off with a forward by the authors, okay? I don't know who these people are, but I presume they obviously work for BlackRock. Okay, so they start off with 15 years old or young, however you want to look at it. They say what they are as a fiduciary. Um, okay, so they talk about that. Key points, investors considering allocating to Bitcoin are grappling with how to analyze it. Okay. So this is what it is. It's different from buying gold or buying shares in Tesla or something like that. Given Bitcoin's unique properties and limited history, Bitcoin with its high volatility is obviously a risky asset, but anything's risky. Okay. You put your money into anything and there is always an element of risk. Money's risky. Okay, just keeping your money in money is risky. So is Bitcoin a risk on or risk off asset? Okay, that's one of the most prevalent questions our clients ask us. All right. Why Bitcoin matters. First, it's important to ground ourselves in the fundamentals. What gives Bitcoin its relevance? Well, its creation in 2009, Bitcoin became the first internet native monetary instrument to gain broad global adoption. Its technological innovation was the creation of a form of currency that was digitally native, global, scarce, decentralized, and permissionless. Because of these attributes, it produced major breakthroughs to multiple centuries-old problems that other forms of money have struggled with. Bitcoin hard-coded 21 million, and obviously there's about probably 16, 15 million actually um, circulating at the moment. A lot of it has been lost. Its global, digitally native nature means it can be transported anywhere in the world in real time at near zero cost, transcending the frictions long inherent in moving value across political borders, like gold and stuff. Its decentralized, permissionless nature made it the world's first truly open access monetary system. Okay, what makes Bitcoin relevant? Prone to inflation and debasement given a non-fixed supply. Okay, so this is money compared to what Bitcoin? Fixed maximum supply, difficult to transact across borders because you've got different currencies. Digitally native and borderless, permitting near instantaneous global transfers of value. Access limited to one's particular country, controlled by central authority. First truly open access global monetary system. Bitcoin's path to 1 trillion in market capitalization. Despite Bitcoin's remarkable rise and significant global adoption to date, its potential ultimate development into a widespread store of value and our global payment asset remains uncertain, and Bitcoin's evolving market value reflects that uncertainty. Bitcoin outperformed all major asset classes in 7 out of the last 10 years, leading it to an extraordinary return in excess of 100% annualized over the last decade. Okay. Bitcoin's long-term performance. Okay, so we can see the cycles there. An uncorrelated asset. So Bitcoin reflects little fundamental exposure to other macro variables, explaining its low long-term average correlation with equities and other risk assets. While there have been brief periods where Bitcoin has seen its correlation spike, particularly around episodes of sudden shifts in US dollar real interest rates or liquidity. These episodes have been short-term in nature and have failed to produce a clear long-term statistically significant correlation relationship. Okay, so the stats say there's no actual 100% correlation between whatever's going in macro economics. Bitcoin has exhibited low historical correlation with US equities. Okay, so bit of a spider kind of crawl across the paper there. Bitcoin and gold. Bitcoin as the first decentralized non-sovereign monetary alternative to gain widespread global adoption. There's no traditional country counterparty risk, depends on no centralized system, and is not driven by any one country's fortunes. So obviously, when certain countries turn to shit, when oil prices go up or down and that kind of thing, it's not dependent on those kind of factors. So, that when you're looking at risk on, risk off, it obviously reduces the risk. Because of these attributes, Bitcoin has been seen by some as a flight to safety, okay? So less risk. Times of fear amid some of the most disruptive global events over the last 5 years. Notably, in some of these instances, Bitcoin's first exhibited a temporary negative reaction before subsequently rallying. Okay, so whenever you get some bad news, and typically Bitcoin can go down like most things, but it then recovers. And you've got the various returns on various events that have happened, COVID outbreak, see it went down 25% and things like that. But then over a longer day period, Bitcoin's up 21%. So you can see that it's behaving better than gold and the SPX. US debt dynamics re-enter focus, accelerating US debt growth. That looks horrendous, that yellow graph. Obviously, things went wrong, terribly wrong here in 1970. Oh, look, that's when we came off the gold standard in 1971, I do believe. So that's when things went to pot. People just printed off money. The government's just printed off money, or whoever's in charge, the Federal Reserve, okay, and all the other banks, I guess, around the world. Bitcoin is still a risky asset. Okay, so that's not really saying anything. Anything's risky. Conclusion, okay. While Bitcoin has shown instances of short-term co-movements with equities and other risk assets, over the longer term, its fundamental drivers are starkly different, and in many cases inverted versus most traditional investment assets, okay. As the global investment community grapples with rising geopolitical tensions, concerns over the state of the US debt and deficits, and increased political instability around the world, Bitcoin may be seen as an increasingly unique diversifier. Against some of these fiscal, monetary, and geopolitical risk factors, investors may face elsewhere in their portfolios. In other words, a flight to safety. Okay. So what they're basically saying is you should have some in your portfolio, even if it's like only 1% or something like that. That is basically what they're saying here. Get some in your portfolio. From a portfolio perspective here, this is why Bitcoin held at modest allocations can have a diversifying effect on portfolios, whereas at larger position sizes, its elevated standalone volatility starts to have an outsized impact in increasing portfolio risk. Now, they did put a little 8 against that. Historically, the impact of adding Bitcoin to a traditional 60-40 portfolio of equities and fixed income, respectively at low single-digit percentages, had a material positive impact on the Sharpe ratio. Okay, so they're basically saying buy Bitcoin, it's good. That's the conclusion from this little white paper that Blackrock has produced on Bitcoin. Okay, I'll leave you a link in the description so you can read it all for yourself if you wish to.